I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINReciprocal. My trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure is the same as yesterday, except I got into some SOXL today. Honestly, a little bit too early and a little bit too aggressive. And being completely honest, it was probably slightly irresponsible for me to keep as much as I did into the report, but I did, and I'm just managing it here post this Micron report. Obviously, I'm getting a little bit lucky as it's moved in my favor. So I'm going to continue to manage that while I talk, and that's the reason why I'm a few minutes late to get the meeting started, so I apologize about that. All right, so let's get into it, guys. The market got clobbered today. It's getting a decent bounce back after hours here because of the Micron earnings report. It always seems like there's something that comes out and saves the market. Even with where we've bounced back, though, these technicals in the daily chart of the SPYs don't look good. So including the bounce back from Micron, we're still down 0.9% on the day for the S&P. We're still down 1.5% in the Qs, and that's following a $2 plus bounce here in the Qs because of Micron, still down 1.5%. So the market got clobbered today, especially the Qs. IWM down 0.9% on the day, also up a little bit from Micron. TLT flattish, the dollar up a little bit. Metals, gold daily chart looks great. Gold up 0.9%, looks great. Silver, they tried to sell a little silver at a certain point today, but it recovered right back. Silver continuing to do its thing. Bull trend continuation on the daily chart. Continues to look great, but a little bit extended after today. The digital gold not doing so hot. Bitcoin still down 2% on the day. Daily chart of Bitcoin looks awful. Ethereum down 4.25% on the day. Daily chart on Ethereum looks awful. And Solana down 4.3% on the day. And the daily chart also looks awful. It's basically new daily chart lows here for Solana. So they're continuing to absolutely wreck the crypto trade. So today got me a little bit off guard. Got to be honest. Yesterday we had the downside tail in the market. We closed a little bit below SPY support, which was concerning, but we had a downside tail, and then pre-market this morning doesn't feel like it because we pretty much sold down all day, but pre-market this morning we were actually gapping higher. So I'm like, all right, we got ourselves a little bit of a downside tail yesterday, and now this morning we're reclaiming our previous support level in the SPYs by gapping up above it. I'm like, all right, maybe we see a little bit of opening selling just because we are, like set the gap. And I guess actually by the time we opened up pretty flat. But I did not expect us to sell down the way we did. I kind of thought that this market saved itself yesterday with that downside tail. I thought that was going to be more of a real pivot low in the SPYs and the Qs, which the Qs are a little bit more neutral, and the IWM had pierced down to the 21 EMA, but still managed to close at 250, so a deeper potential pivot low. But what I was saying in the morning meeting today, even though I really didn't expect the market to break yesterday's low, we have to be prepared for all possible situations. And I said, if the market were to break yesterday's low, especially on a closing basis, it's going to start to do a lot of damage to the technicals. And that is where we're at. The SPYs here now have really lost support. They've really lost the bullish consolidation in front of all-time highs that they were building out. And the technicals here in the SPYs have gone from firmly bullish to firmly neutral, as far as I'm concerned, after today's close. The Qs had already been relatively weak because of AVGO and because of Oracle. They had already been more neutral on the daily chart. They tried to create that day 3 pivot low yesterday, blew through that low today. Semiconductors, AVGO continuing to sell down. The move in AVGO is getting kind of crazy. We can look at that in a second. So, Qs are really not looking good now. Technically, they're neutral still on the daily chart, but the fact that we immediately broke yesterday's low and closed below it today is most certainly not good. And then the IWM, it needed to hold. This was the most bullish of the indexes. if you were going to be looking for like a Santa rally anywhere, I felt it should be in the IWM. And this failed to hold the 21 EMA. It closed below that potential pivot low, and that's it. So after today, we have some real damage on the big picture of our charts here technically, and just take it in stride. The market, where a lot of us were kind of expecting a Santa rally into the end of the year here, is now giving us much more neutral technical signals, which means that you can have longs on and shorts on, but it's very hard right now to have conviction in that end of the year rally that we were looking for, unless we very quickly see some levels get recaptured. And maybe Micron helps with that, right? Micron actually already has us, we closed on dead lows today, so Micron already has us bouncing back pretty good. Again, it's all about the AI trade. I've been saying it over and over and over again because of how important AVGO and Oracle's earnings have been, and especially because the stocks haven't traded well. But you guys got to remember, 85% of the stock market gain for 2025 is from the AI trade, and 100% of the economy's gains in 2025 has been from the AI trade. If it's not for the AI trade, the U.S. economy is most likely in a moderate recession at this point. But the AI capex spend is so massive, it's boosting up the entire stock market, it's creating the wealth effect, and it's enabling us to still have some degree of positive growth in the United States. But it is the most important trade that's out there, considering how much performance has come from it. So Oracle continuing to sell down. You got that Blue Owl news this morning, not good. They're losing their funding for their Michigan data center or whatever that they were planning on building. People are most afraid of Oracle because they're going cash flow negative to try to catch up in the AI race. The interesting one, almost more to me than Oracle, is actually AVGO, because when I look at Oracle, it makes perfect sense to me that Oracle is turning into like the loser of the AI space. There's a lot of concerns that the amount of capex spend is not going to turn into profit and revenue for any of these companies, but Oracle is the one that's going heavily free cash flow negative in order to try to catch up, borrowing a lot of money in order to try to catch up, and they're building out systems for companies when they've got no real guarantee that they're even going to see the money that they're building out the systems for when you're thinking about like OpenAI. So Oracle selling down the way that it has been makes plenty of sense to me. AVGO, okay, fine. Stock went into the earnings report at all-time highs. A good report was already priced into the market for AVGO. They sold it down a little bit. Fine. I totally get that. But you go back and you look at that AVGO report, it's a damn good report. The only thing that is really wrong with the report, is nothing, but the year out guidance for revenue was like not good enough, basically, is what people are pointing to. And this is a company that historically gives fairly conservative guidance and then beats it, right? So I didn't find that to be overly worrisome, but fine. Going into all-time highs and in the report, they fully priced in an excellent report. They got an excellent report. They sold the stock down. I've seen that happen before, and we all know, anybody who's been traded on my team long enough, this is a common theme in earnings season. When stocks are up a lot into the report, a good report oftentimes is not good enough. No surprise to see AVGO trade down to 380 on that report from where it was, 370 on that report from where it was. But to look at AVGO 4 days after the earnings report and to see that it sold from 410 down to 320 and basically a straight line down with a small break yesterday, it gapped up this morning too, just to get annihilated the second the stock opened. That's getting a little bit crazy to me. So AVGO very extended now into this broader 320 support area. So I'm adding to my position on the way down here, managing my position appropriately. The 80 MA on the daily chart still at 360. My target for the moment is still the low 350s, but just the way that my game plan is set up, I will be bringing that target down if the 80 MA catches up to like 355. I'll be lowering that target down further as the trade, fails to satisfy the downside extension through price, basically. So that's kind of where we're at. It is all about the AI trade, so maybe Micron here is helping to save the day a little bit. We'll find out tomorrow. The Qs at lows, by the way, we're getting like $13-14 a downside extension, so they're starting to hit that point of extreme downside extension, but it's also technically only a day one. So we'll see what happens again tomorrow, given Micron after hours today. But if Micron disappointed or even came in line or was trading flat on its earnings report, I would have expected that we would get further downside follow through tomorrow, even though we're starting to get extreme extension, as we know, and as I was chatting with Billy D a little bit in the VTF, seeing the short-term tactical in the green zone for 2 or 3 days in a row is not unusual. Seeing the market trade at, similar idea at my version of extreme extension for 2 or 3 days in a row is not unusual either. So maybe Micron can save the day a little bit tomorrow and enable the market to be able to hold in. But otherwise, I would honestly expect with the way that we closed today that we do see some degree of downside continuation tomorrow, because technically today was only a day one. And if tomorrow we were really getting into the low 390s on a day two, that extension would become so extreme that it would make sense to me to begin to start to piece into some longs in that area. But otherwise, you got to be careful. With that said, the semiconductor space on the downside here is really starting to extend. And it's from like extension up to extension down, and we already looked at AVGO. So that's why I was trying to stick with this SOXL long today. Because look at that daily chart. Fourth down day in a row here. It got down to 36 bucks at the ADMA at 42. I should be able to eke out some change on that for myself. But I just started a little bit too early and a little bit too heavy, and then I'm honestly getting a little bit bailed out here with this Micron earnings report. So that is all that I've got. I will be more than happy, like always, to answer any questions that anybody may have. First I'm seeing here is from Robel. How much do you think is from the uncertainty around the president's speech tonight? I wouldn't think very much. I have no idea what the president is going to be speaking on tonight. I don't know if anybody knows. I don't know if that's been publicly announced. But I just feel like this happens often enough that I don't want to say it doesn't matter, but there's been many times where the president is expected to speak about something tonight or tomorrow night or whatever, and we don't know what the exact topic's going to be. And more times than not, that topic ends up being something that's not related to the stock market and doesn't really have any impact at all. So I would not expect them to be pricing in anything into the market, honestly, from the president's speech tonight, or at least very minimally. That's just my initial thought process. Maybe you guys know something I don't, if you know the topic on what he's supposed to be speaking on. But I guess we'll find out. What time is he speaking? Is it 6, 7 o'clock? I forget. And I know he's always late. Always much too late. But let me know if you know what time he's supposed to speak, so we can see if the futures move. 9 p.m. All right. So then after hours market won't even be open. 9 p.m. is past my bedtime now. I'll be asleep. From Ethan. Pre-market research was a topic from yesterday afternoon. It made me curious and reflect on what does your pre-market preparation usually consist of? Which factors matter most to you before the session starts? What do you always make sure you are looking at? Sure. So you're happy to give a brief on my process. Basically, the way. Sorry, just getting distracted by position here really quick. The way that my process works is, I wake up and I see if the market's. I did not yet see the Rubner note. I saw that you posted it, but I didn't get the opportunity to read it into the close. But I most certainly will. He's talking about index concentration. Yeah, I mean, that's the big dynamic for quite some time. And anyway, let me answer Ethan's question and I'll circle back. So pre-market research. First thing I do when I wake up is I just see if the futures are up or down, usually quickly on my phone while I'm making my coffee before I even open my computer. Once my cup of coffee is complete, these days I've been doing like a pour over. I used to always do a drip, but I don't know, microplastics, et cetera, et cetera, et cetera. Everything I've been reading, it kind of seems like doing drip coffee technique might be the healthiest way to go about it. So that's been my new thing. I boil some water and I've got like a ceramic drip coffee thing. And I know this is not related to your question at all, but that's how I do it. I know where the futures are at that point. Once my cup of coffee is complete and hot in my hand and I've had a sip, I'm turning on the computer. And keep in mind, I've got positions out every night. So first thing I'm doing, the positions that I have out overnight, um, they are part of preset game plans. So if we're gapping up or gapping down, I'm supposed to be doing buying or selling at certain prices according to those preset game plans. So typically the first thing I do is I'm pumping orders into the system per my preset game plan, covering some stock, selling some stock, getting in 500 limit orders, and only after that's done do I really actually begin my real research process. And honestly, my research process is almost entirely done through the VTF. We do a great job aggregating information and news and upgrades and downgrades and earnings reports and everything else into the virtual trading floor. So I basically go through every stock chart that gets a mention in the VTF in conjunction with what that mention is related to. So that includes most mornings Tate is giving us a list of like potential RDR trades and inside bars, so I'll scroll through those names really quickly, and then every name that's got a mention for an upgrade or a downgrade, I scroll through those names. Even if you look at my list today, right, I had Ally on there, I had Gap on there, I had SQM on there. That's because Jim was getting the information into the VTF on those names, upgrades and downgrades, nice and early. I really appreciate that you do that, Jim, and also everyone else who's getting information in the virtual trading floor. It just helps everybody. And I'm scrolling through those names and looking at the fact that those stocks got upgraded in conjunction with what the daily charts look like. And I go, okay, there's a setup here in Gap. It's a breakaway gap, and it got upgraded. That looks really solid. This is a potential. This is a. I don't know why Monica's always trying to steal my thunder on my afternoon meetings. I don't even know who Tom Sosnoff is. But, no hate on Tom Sosnoff. I'm sure he's great. And that's where the ideas are coming from. Going through every single name that gets a mention here. Upgrades, downgrades, earnings reports, etc. And then on top of that, I've got a universe of probably 50 stocks that I look at every day. The Mag 7 stocks, some of the energy names, the names I'm already trading, whatever's been hot recently. And it's basically just going through a combination of what's the headline, what's the chart look like, is there a setup? If so, it potentially makes my list. And that takes a lot of time. Pat's note comes out at 8:30, hopefully, sometimes a little bit after. I read through all of Pat's note for the more macro stuff to help me build my conviction on my thesis on the big picture, or come up with a game plan then for the index level for how we're set to gap and everything else. By then it's 9 a.m. and I'm plowing into the morning meeting to present what that game plan looks like in the individual stocks that I am looking at. So I hope that helps. From Peter, was today's move a 2 sigma expected move? Does Pat calculate those via options or historical volatility, ATR? Any particular framework that you think is best? So that's a great question. I don't know how that is calculated specifically, or how like a 2 standard deviation move is calculated. I know that it's important because it's going to impact like systematic buying and selling. That's the only reason why I would want to know. Otherwise, I don't care. Honestly, I just kind of guesstimate in my head. I'm like, oh man, we're down a percentage plus, so this is where we're at, and this is what this technically means for like vol control and CTAs. So that's pretty much how I do it. I'm not, sitting here calculating what the exact price of a one or two standard deviation move is, as an example. So don't really have too much for you on your question, but that's what I got, and I hope it helps. Anyway, from Bill K here. So on the Ruger note, which I did not read yet, he's talking about index concentration. I've seen others talk about Mag 7 versus the 493 and the dynamic changing in 2026. Do you have any opinions on that at all? Yeah, I have an opinion on it. It's probably not a hot take. It's something that's been in the back of my mind for, honestly, the entire calendar year of 2025, even though it hasn't overly mattered. And it's exactly that. It's just when you think about just how massively big these stocks are, that's what controls the S&P. It goes back to that statistic of like 85% of the stock market's gains are from the year are basically coming from AI. Well, that's Nvidia, and obviously to some degree Microsoft and Google and pretty much Mag 7. And if you were to lose strength in Mag 7, the market could go down even when the market of stocks isn't so bad. So that is really the extent of my thought process. It's definitely something I, pay attention to as an index level trader. Yeah, these numbers are crazy. These numbers are crazy. Mag 7 is 32% of the S&P. AI themes are 41%. Mag 7 is 42%. 7 stocks, 42% of the NASDAQ. AI theme is 59%. It's the entirety of the stock market this year. Yeah, Greg, it is looking that way. It is starting to look that way. I don't disagree with you on that. Sorry, just got filled. He's had a pretty strong bull case. I mean, look, no one's perfect, and you just take the information as you see it, and you do your best with it. And I think that would apply for any of these analysts that we pay attention to, right? And it was a great call on the metals. He had a really good call on the metals. What else? Yeah, so I was using the French press for a while, and then I read something about the French press doesn't filter out, like when you're looking at the health benefits of coffee, the French press doesn't filter out something that is actually a cancer-causing agent, which like a paper filter does. So, and then I broke my French press, and then when I was deciding on, by accident I dropped it, and then when I was deciding on if I was going to buy another one, so I went from the drip to the French press to the pour over, because it sounds like the pour over is kind of the perfect combination of getting the health benefits, filtering out, I guess, some of these thicker elements that the French press doesn't, that can be potentially cancer causing, while the drip coffee machine's old school one that I use forever, you're just running hot water through black plastic, and I don't think it's very good for you. So it's kind of how my evolution has come along for what it's worth. Yes, complete nerd for sure. And I've always actually loved science. Big science nerd once upon a time. These days it all goes towards stonks. Anyone saw anything on XBI into the close? I did not. Could have just been everything else with the market. But yeah, some weakness in XBI along with everything else in the close. Micron trading up 5%. LOL. Rev guide is absurd. Not sure what stock does, but $19 billion revenue next quarter, 32% above the sell side. Wow. You don't have to buy AI stocks, that's fine, but the revisions in 2026 that are the best will remain in AI. Not sure who's. No, that's from Bank of America. Yeah. Yeah. And Micron report, I didn't go over it with you guys, with everybody. The Micron report was excellent. Popcorn kernel stuck in my throat. From Jackie, I know you mentioned that you were profitable fairly quickly when you joined T3 and started trading. Looking back at your first 5 years, were there specific periods, tough days, weeks, or even quarters where things felt especially challenging? Oh, of course. How did you work through those stretches at the time? Also, how do you think you've grown the most since those early years compared to how you operate today? Sure. Appreciate the questions. Um, so I got my first paycheck as a trader with T3 after my second month trading. It was a really small paycheck, but I was really proud of it. I was able to be, profitable in a small but kind of fairly consistent way very early on. But that by no means means that all I've ever known is sunshine and rainbows over the course of my trading career. I have had many very difficult periods, slumps, periods of prolonged P&L contraction. Even this year, I had like 2 or 3 really tough months in that like summer period this year. After a really good start to the year, I got slaughtered for a couple months there. I was just too heavy, too short, too early. So it, like I said, it by no means means that I've never known challenging periods, difficult periods, account drawdowns, P&L pullbacks. I have I've gone through all that. Part of that is when the market changes and you don't change with the market. And that's the hardest part, especially I think when you're new. One thing that I'm a little bit better at now because I've gone through this a lot is adapting to the changes in the market as they come. That's especially hard, I think, when you're a newer trader, because when you're a newer trader, you don't even know what you don't know, and then you're just starting to figure things out if you're on the right path of learning and maybe starting to see some profitability, and then bam, everything changes. And then all of a sudden those strategies that you were starting to figure out that were working for you, they're not working in the same way, if at all, and you've got to figure out what happened and what adjustments you need to make. So yeah, one of the big slumps that I first had was in 2012. The market went through a really big change, and the way that I was kind of taught to trade, which was based on tape reading primarily, all of a sudden didn't work. And then that was honestly when T3 was most important to me. Sorry, the CEO of T3 just called me. Give me one quick second. In the afternoon meeting, we'll call you as soon as it ends. That's when T3 was most important to me, because I was able to talk to people who were more experienced than me, who were having success in the market environment that I was struggling in, and I had to have a huge change in my trading. Went from being primarily a short side, almost entirely day trader based on the tape, to bigger picture technicals on the long side of the market. And it made all the difference. And the conviction to make those changes came from having conversations with people at T3 who were really good traders, who were bigger than me, who were significantly more experienced. So that I think is when you really want to make sure you use the community. Every once in a while, and there's a whole bunch of people here in the VTF that don't communicate in the VTF, and every once in a while I'll get an email from a trader who is part of T3, has access to the virtual trading floor, is struggling, and then they reach out to me and they're like, "Hey, I'm struggling," and I'm like, "All right, well, I'm sorry to hear that. I'm happy to do what I can, but are you even helping yourself? Are you even using the resources that we've given to you? I've never seen you even say hello in the virtual trading floor a single time." So, and this doesn't mean you, Jackie. Obviously, you asked the question, so we see you in here communicating all the time, and I appreciate that. But like the way that I feel about where T3 is, if you're a trader here at the company, is that we provide all of the tools that are necessary for success in trading, but you have to be the one that steps in and actually uses them. I can't make anybody do anything. It's like my coach used to tell me all the time when I was fighting professionally. I would get back into the corner in between rounds, and he would say to me, Derrick, I can tell you exactly how to knock this guy out, but I can't make you do it. You have to actually get in there and execute and do it. And I feel very much that same thought process applies to what we do here. We got a bunch of really good traders here in the VTF with lots of different backgrounds and experience levels and approaches. And if you're struggling, but you're not asking questions and you're not reaching out to people to try to improve, then you're not going to improve. If you're just going to do the same thing over and over and over again and expect a different result, that's called insanity, right? So, how I got through the challenging times was a combination of seeking out more experienced people for questions, working my ass off by keeping really good journals, studying those journals, reviewing my trading, figuring out what changes I needed to make, working on my game plans, and also sizing down in the more difficult times. When you're not doing as well, you gotta size back down. The worst thing that you can do is think about, this is how much money I had put in, or I came down, or gave back, or whatever, and thinking about making it back. You want to learn as a trader that wherever you are is where you are. And it doesn't matter where you were, all that matters is where you are. And all you should be doing is making decisions based on where you are and not where you were. If you're making decisions based on, I just gave back X amount of thousands of dollars and I need to make it back, you're most likely going to be digging yourself into a bigger hole. If you make the decision of, okay, my account size is no longer, I'm just going to make up a number, $100,000, now it's $50,000, I am going to be trading as if I have a $50,000 account and focusing on consistent profitability, then you're going to eke those gains back consistently eventually, and you'll be able to get back to where you were, and then that's when you size back up. But not by going after it. Recognize where you are. It's not important where you were. And I think that people struggle with that mentally and from a psychology perspective for obvious reasons. Where in the VTF is the information that I was referring to? You just got to be logged in early enough. It's all in the chat. So if you scroll up here in the chat to prior to 9 a.m., you're going to see a ton of information that Pat put in, Tate put in, Bill K put in, Jim put in, sometimes me, sometimes Mike Reed, sometimes others. So just be logged in prior to 9, and you're going to see that a lot of information is just being completely pumped into the virtual trading floor, which is awesome. From Peter, I'll inquire with Pat tomorrow, but to follow up with you, is there an inherent difference between a 1 sigma and 2 sigma versus 2 sigma expected move in the flow follow through? I would think so, from vol control specifically, not necessarily a number, but more of a feeling. Does this typically prompt a large buy or sell state for these funds? Yeah, those increases in volatility, outlier days, outlier moves are going to be triggering systematic action. Probably especially more with vol control, but to some degree maybe CTAs at a certain point if it's causing CTA triggers to hit. What did I do when I was in a heavy drawdown? Yeah, again, everything I just described. Seek out advice from more experienced people, work your ass off, keep good journals, review those journals, and size down. I've never used TraderView for journaling. I started journaling before TraderView or any of those similar companies existed, so I already have had my processes in place, just using, Word and Excel documents. But I know other guys here in the VTF have used different things and maybe have some suggestions for you. It sounds like Greg here has already given you a suggestion. Over in the YouTube from Mike, if the Q's gap down, would it be a good opportunity to buy the dip for an oversold bounce? If they're probably not going to gap down because of Micron. I'll start with that. They're probably going to gap up. But if they were to gap down, I would say it depends on how big the gap is. I would think it'd be good for at least a shorter term bounce, but it might not be enough. It circles back to what I was saying earlier. Like these day one downs, sometimes you can have 2 or 3 days where the market can stay really extended to the downside. So if we were to get a gap down tomorrow and it was sizable, I would probably look for an opening buy, but that opening buy would be something that I would probably sell very quickly, because once the equilibrium catches up, there's a good chance that it actually could roll back down again, because tomorrow's only a day 2. All right, looks like I got through the questions. I'm going to jump. I got to call the CEO back. Hold on. Jackie's here with one. What about if a trader's style doesn't necessarily fit in the VTF? For example, I can be honest and say that I haven't been the biggest participant intraday, as I cannot tell anyone in the group and need to hyper-focus on the market. I learned this the hard way, as when I was active a few years back, I get tempted with all the call-outs in the group and take lower grade trades that I want to admit. This is my problem. So I mute and focus on my game plan. Names him to keep. Yeah. So I think that's 100% fine. I have no problem with that at all. I think that, and that makes sense too. Honestly, I completely get that. You did your research. You have your game plan. You want to focus on your game plan. That makes total sense to me. For individuals like you, I would still recommend that you're there at least for the pre and post market, which it sounds like that you are, and that's when you're most active. You're there for the pre and post market to take advantage of all the research, the morning meeting, and then when the market's closed, to take advantage of the education stuff that we do in the actual afternoon meeting. Makes total sense to me. From Steven in the YouTube, any thoughts on Netflix? I know you have to go, so no worries. Any thoughts on Netflix? It's bear flagging on the daily. I don't know. The stuff with the WBD buyout is messy. So I don't have strong conviction here. I think that it could be a long if it gets back above 97. And it looked like it wanted to be stronger today, and the market just wrecked it. So, and I think it got defended by an analyst this morning as well. Maybe there's a trade here above 97 if this pattern can break to the upside. I wouldn't fight it beneath that because it's technically building out a bear flag. At some point, I think if there's a dip buy here, that happens. But like I said, it's a bit messy with the WBD stuff. All right, guys, I am going to wrap it up. Have a good night. I'll see you all tomorrow.